And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. It's a chilly 29 degrees here in Chicago on this Thursday, December the 9th. If you're in the markets, hopefully things are going your way, but as usual, we're going to be seeking good context, finding good risk management, and always exercising patience. Economic numbers this morning, 7:30, the jobless claims came out. Initial jobless claims were expected to be about 215,000. Came out lower than that. That's a good sign, 184,000. However, the continuing jobless claims was considerably worse than that. They were looking for 1.9 million. Came out 1,992,000. So a little bit of conflicting information. Didn't see any real good knee-jerk reactions from our markets this morning from that information, and we're still waiting for a preliminary wholesale inventory number as well as the nat gas numbers due out at 9:30 Central Time. So what traders are thinking about, at least what caught my eye this morning, U.S. stock indices were lower in early trade, but still largely in balance from yesterday overall. The Chinese company Evergrande has filed its first declaration of default. Chinese markets shirked it off and actually rose over the night last night. Amazon has been hit by a $1.3 billion antitrust fine from Italy. We have some earnings due out after the close today. Oracle, Costco, and Broadband all report after the close today. And crude prices, at least the short time frame rally we've got, has been stifled by doubts about demand as potential COVID restrictions are looming again. As always, we're looking at the VIX, the dollar index, and the 10-year yield. VIX up about 4%, 2071 last I looked, makes sense. Equities off a little bit. Dollar index up slightly, 96.11. The 10-year yield largely steady at 1.48. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. And want to say thanks to all of you who attended the group coaching yesterday. As always, I hope it was useful and interesting for everybody that was there. Monday will be the next group coaching. We do have the Q&A with Top Step founder and chief visionary officer Michael Patak today at 3 o'clock, Dan, and he will be talking and answering your questions. Make sure you get to that. And it's always a good one, always interesting and always fun. As always, got to say good morning to everybody. Zorain, first in the room this morning. You win the prize, Zorain. Felix, good to see you. Chris, Jim, Charles, Brian, Dr. VJ. Merrick, Jonathan Lake, Wen, Jeff Mullins, good to see you. Adam, Andre, George, Dante, Sarah, Terry King, Vince, good to see you. Good this morning, my man. Johnny Baracco, Jamie, Jamie Mint, good to see you. Rob T, Toadman, good to see you again. Manuel Caesar, good to see you. And Tova Rain Song, good to see you again. A couple of maybe new names there. If this is your first trip to the market forecast, welcome. We're here to help. Our goal here is help you find your success. Good morning, Jerry is awake. I'm hoping that I am too. Devante, Trading Research. Somebody's missing today. Oh, yeah, my brother Rick. I wonder where he is. Ah, there he is. Good morning, Rick. Good to see you. Always looking forward to getting together one of these days. I feel like it's been years since we've seen each other, and we got to get together for the holidays at some point. The settlement price for nat gas yesterday is a number that I think you'll probably recognize. We'll take a look at that when we get there. Right. So let's see what else we've got going on here. I think we're ready to move on to the charts already. Good morning, Mustafa, Alfred. If you are coming and watching the forecast, or if this is your first day watching the forecast, anything, say hi. Say hi. I like to look at the names. I like to see the names, and I like to remember the names when we get the chance to talk. So say good morning every morning. Let's jump into the charts. We're going to try and make it happen. We had a really a good shot in that euro yesterday. That was really the only thing that was interesting to me in many of these markets yesterday. But let's take a look at what we're seeing now. All right. Okay, so as always, starting with the daily and crude. The crude is now entering rollover. Rollover is scheduled for a week from today for crude oil. So we have to remember it's going to blur things a little bit. Hi, Kevin, Norman, Eric, good to see you. Yes, that we will make it happen, Dr. VJ, for sure. Good morning, JB, Eric. All right, so focusing on the charts now, entering rollover. We got to remember that's going to keep things a little bit more likely to be range bound. Yesterday on the move up, or the attempted move up past Thursday's high, we lost open interest. So it looks like we're squeezing some of the shorts out of the some of the last of the shorts, I would have to say, out of the last move to the downside. And taking those shorts out of the market is going to pull buying power away from the marketplace. So volume was pretty kind of low. Open interest, losing open interest. But again, we're coming into rollover. I don't think we're that blurry just yet. $71 seems pivotal in structure. It's weekly kickoff level. We tested down to it for 2 days in a row. Looks like we may be headed back down to another test of it right now. If we get the chance, we'll watch and see what happens on the 1 minute opening and see if there's any opportunity there. I'm going to look at the 30-minute chart here now. Going to make this a lot bigger so we can all see. So we had the late spike, the acceptance of higher pricing above an important inflection level of 7,100. The last couple of days, we've largely been just kind of range bound. Time is really the acceptance of price at a particular level, but I'm not all that pleased with any momentum or increase or in volume or open interest up at this level. We've got to be thinking, what is this market attempting to do and how good of a job is it doing getting there? We've got open interest mixed to short near yesterday's low. Are we going to open with a gap or without a gap? We're going to see that here in about 5 minutes. I'm going to try and stay patient. If we open with a gap, it may be interesting for us to look for an opening range trade. I think my major focus probably will be if we have the opportunity to see price back down around 7,100, that weekly kickoff high that's been supportive for the last couple of sessions. How long will it hold? And again, remember, we're in rollover. So 1, 2, third day in an attempt to maintain price at higher levels, ask yourself, how is it doing? Is it killing it up here? Is it bringing in volume? Again, open interest is going to be an issue. We're going to see if we open with a gap. I certainly want to try and return to crude oil here at about 8 o'clock. Let's take a look at the E-mini S&Ps now. Okay. So today is switch day. December is going to give way in volume throughout the day to the March contract. I'm still looking at December because the volume is still greater. Tomorrow morning, I will be trading the March contract. If you're trading the March contract today, you're fine. It'll be a little bit less liquid, but increasing in liquidity as the day goes on. It's never really a finite number when the volume moves over. So on switch day, I tend to stay in the December contract, and then the following day, tomorrow, I'll be in the March contract. Knowing we are in rollover, open interest and volume are very blurry. You could look at this and say, oh my goodness, we're cutting off volume at higher pricing, but we are increasing volume in the March contract. That's what it makes the rollovers so difficult for many traders, I think, to be able to trade. I know that back in the old pit days, there were discretionary traders that weren't trading spreads that took the 2 weeks of rollover off because the market just acts a little bit differently, and it's very hard to put your finger on. What are we looking at? Well, in this particular chart, I'm looking at the fact that we've got a move up above weekly kickoff. We've got some acceptance up there. We're within within earshot of the all-time high. We've got an inside extended trading hour range today. So it's not like there's a huge change in the perception of value. And I got to remember we're in rollover. So that's going to be likely more of a higher probability of a range-bound type of situation. 30-minute chart. Almost looks like crude oil. 2 days, day 3 of balance. Settlement is all the way up here at 46.99. Almost looks like we put in a late spike yesterday, doesn't it? Well, when we put in a late spike back here, did we put in that? No, it was in the crude oil that we put in the late spike. We opened with a gap and we rallied, similar to the situation here. Now we've got a late spike at the high, and it looks like we're going to be opening below it. That's rejection of higher pricing. That late spike is when the market puts in on a new high in the session, and then finishes the day up there and doesn't have the opportunity to spend a little time and accept price at that level. When we open it in or above a late spike to the upside, we look for longs. We open below a late spike. It's kind of marks a little bit of possible rejection. However, we got a lot of shorts in this market. Short time frame shorts. If the short time frame shorts don't continue to get what they're looking for, and that's continuation to the downside, we may see a move back towards settlement. So there's always the possibility of there being better trade location. We're in range and in value. I'm staying patient until we start to establish some sort of early range today. I'm probably going to remain patient and wait for an opportunity. Wait for something to come to me. I'm not looking for trades in the S&Ps today. Hey, let's go back and watch the crude open. Just opening in the opening range. Little bit of a gap that we just closed. Here's the 1 minute. Doesn't seem very... Yes, let's do this. Tomorrow is rollover for all stock indices. So you're going to see more volume tomorrow morning in the March contract. So we're going to change to the March contract. Okay, almost to the end of the first minute here. Don't see anything very aggressive here, do we? And there it is. Our opening range is 42 to 57, 14 ticks wide. If we just got long on the breakout above it, we're sitting here looking at a 10 tick profit right now. Remember, going back to the context, we know that we've left the opening range at the low of the session. We opened with a gap and closed it immediately. If we reaccept inside of value from yesterday, which is a value area special situation play, there's a high probability of price returning to the high of value from yesterday. Remember, acceptance is highly subjective. See, we're starting to see perhaps some of our overnight shorts a little bit nervous here. If they put their heels in the sand here, it might be a little bit tougher to get this move to the upside, but certainly looking like they're a little bit nervous, and knowing that the opening range is the low of the session with a gap that closed immediately. There it goes. There it goes. I try not to cheerlead. So initially, we've left the opening range at the low of the session, out of range, out of balance, coming back into balance if we accept a move back to the other extreme of value, which is around 72.46. There is a higher probability of that. There's nothing definite in futures trading, in trading or investing. We never know what's going to happen. It's all hypothesis and trying to play your probabilities. So, thinking back to the S&Ps, I'm questioning whether I even want to get involved because it is rollover. Nasdaq, same situation, rollover, switch day. We do have a little bit of maybe some more dependable information in the Nasdaq because we're still dealing with weekly kickoff high here. Volume and open interest aren't going to help us today. We're seeing the volume dropping off. That's because more volume is coming into the March contract. We lost 4,000 in open interest yesterday in the Nasdaq, where we added 23,000 in the S&Ps. It's blurry. It's difficult to read during rollover. So again, we have an inside extended trading hour range, and we do have an important inflection level in play here this morning in the weekly kickoff high, $16,323, 16,323. Let's take a look at the 30-minute chart. Trading research, that is just so painfully obvious and genius on your part. We should just do that. I'm just so used to going left to right. All right. So late spike rejection, late spike up here. We did close up there. We are opening below it. That marks rejection of higher pricing. Look at where we are. We're just magnetic towards weekly kickoff level inside value. And I'm not going to be using this level too much today, although it is in play and might offer some kind of opportunity for us. But again, I'm going to be very cautious as the market just kind of rotates above and below this level. It can cut us up pretty good. We do have some overnight shorts in this market. again, inside the value area, I got to stay patient. Again, I question myself as well. Do I want to trade the equities today? It's rollover. Sometimes the market goes too far. Sometimes it doesn't go far enough. It's just a little bit weird, if you will. Gold. Still stuck in balance. We're still stuck in the muck. Our auctioneer is pandering, and he's starting to get a little bit hoarse, I think. We're in short time frame control. There seems to be a little bit more energy coming into this market. We've had a couple of days of increasing open interest, about 1,200 yesterday, 2,500 yesterday, 1,200 the day before that. Very minimal change in open interest on the 2 days prior to that. So it does seem as though something may be brewing, but we don't see anything as far as breakouts from this area of balance. So we're going to trade balance rules. We're going to look at the extremes to fade those extremes back towards the center. Remember, we talk about our tennis player is centrally located on the court, and if the ball goes over here, he's going to try and volley it back and come back to center. And I don't know if that really helps us that much. It seems to be awaiting something. It seems to be awaiting some sort of information or some sort of change before it's going to pick a direction away from this area of balance. Taking a look at the 30-minute chart. We opened with a gap, but still very much range bound. The inability to close this gap, and we do have some considerable overnight shorts, but the inability to close this gap again tells us, all right, we got to start looking for opportunities in the direction of the gap, which would have us looking lower, maybe back down towards the 1770 weekly kickoff low, which we got last week's low just above that at 1772. Yesterday, gold was off my radar. I was not interested in trading it at all. Today, it's a little bit closer to being on the radar as we get closer to the lower extreme of the area of balance that we've been in. Not seeing anything that I want to jump into right now, even though we are out of range and out of value from yesterday. Just the whole bigger picture of here we are. What are we doing? Right in the middle of it, I'm going to try and find something else to do. Look at the euro. Okay, this was our view yesterday before the open. We had a bull flag that was breaking out as we were opening. As a matter of fact, even before the weekly, the market forecast, we were looking at a potential all-day sucker to the upside. So it was a really good opportunity. I mean, from around the open to the end of the day, it was about a $600 profit per contract if you took it, and all you had to do was sit there and do nothing. Volume and open interest, volume was a little bit higher. Open interest was a loss, 12,000 contracts. It's what happens in a bear flag or in a bull flag. You get too many traders short in the hole and they have to bail out. That's why that first day above a bull flag is sometimes so potentially explosive. Is that what I'm looking for? Now it's a little concerning that we're seeing a lack of extension, upside potential, lower upside potential, because we're not seeing that. Support will probably be down around this trend line. Take a look at the 30-minute chart. And Rick, this is not the number we're looking for. Nat gas is the number that settlement, and I'm sure this is going to ring a bell. Look at how short we are in the overnight. We're kind of still kind of bordering the low of value from yesterday. Overnight, very short. There's lots of potential repair up above. We got two areas of single TPOs. Here's the profile from yesterday, if I can get this to come up. Been having a little bit of trouble with these charts. Doesn't look like this one wants to come up. But if we take a look on the 30-minute here, you can just see the low volume nodes here. Low volume here, low volume here. There's two levels of single TPOs. And if we can't get below this high volume node, I'm thinking that the point of control right up here near settlement is a wonderful target, which gives us the opportunity to repair anything that we need to repair from yesterday. What does repair mean? What does repair? Repair means there was an emotional move to the upside yesterday that left a lot of holes, a lot of potential areas where we didn't have the opportunity to do business. Well, maybe, when we go into a repair mode, we try and go back and see if there's anything left to do in those areas of business. Sometimes it's just a matter of being a bit of an eyesore. We got these single TPOs. We got a little balance, little balance, little balance, little balance, single TPOs, single TPOs. It's toothy. Markets are visual. They don't like toothiness. They like smooth. So if we're looking for anything, we've got a pretty decent opportunity near value low from yesterday, right at this high volume node, which is our overnight low. At the very least, it gives us the opportunity to limit the risk. If we can get into something down at this level, we get down too far below it, well, maybe that's not going to work, but at least we're not going to risk a lot. All right. Take a look now. The 10-year. Volume, pretty good on the down move yesterday. We had a 20,000 in open interest on this move to the downside yesterday, but largely still range bound. As a matter of fact, I think yesterday's low put in a more defined bottom to our area of balance. Last week's high and low would put that as our extremes. Short time frame control, volume continues to slow. 30-minute chart. Some perhaps overnight longs. We opened with a gap. Looks like we're headed back towards a gap fill / inventory adjustment. Got plenty of visuals up above in the neighborhood to look at if we are going to continue higher. If we can't close the gap, though, relatively early, we may need to look for opportunities to buy against weakness as long as we can't close that gap. And, hang on a second here. Let's bring that back up. Let's take a look. Natural gas daily. We have been, hang on a second. I just did that, didn't I? All right, so we have a nice little island forming down here. We talked on Monday about watching for slowing momentum. Yesterday, volume fell off. We lost 18,000 in open interest. The momentum is now showing in volume and open interest. Yesterday, we had some shorts covering according to that open interest. Volume dying. It needs new business in order to continue this move to the downside. We may be a little bit short in the hole here, ladies and gentlemen. 30-minute chart. Well, our overnight shorts have now reconciled, talking about, starting to think about maybe looking in the opposite direction. Settlement, 3815, 3815. What's that mean to you, Rick? 3815. It rings a bell for some reason. Now we've opened outside of range. We're perhaps re-accepting value from yesterday, and perhaps even taking care of that value area special situation play in short order here. So our overnight inventory largely adjusted, but now we're dealing with a return to value. There was a great rock jazz band, Return to Value. Oh no, that was Return to Forever. Anybody remember Return to Forever? All right, so that's basically what we're looking at here. Take a look now back at the crude oil. So we have maintained the opening range as the low of the session today. And back into range, back into value. It's a similar situation. Dang it. Shaw, nice. Similar situation. We open with a slight gap, perhaps. We close the gap. Now we're in a value area special situation. I would say it's not too much of a stretch for us to get back to settlement. All right. Get rid of the echo. And yeah, Chick Corea, Stanley Clark, LD Miola, and Lenny White. Lenny White was the bass player. Yeah, there you go. Jason's got it. Lenny White. All right. Trading research, thank you very much for that suggestion. I think we're just going to do just that. We're going to start with the S&Ps, and then we'll go to crude, and then we'll go to the Nasdaq. And kind of keeping the asset classes kind of smushed together there, but it doesn't really matter, right? Devante, you can roll over contracts today, definitely by tomorrow. If you've started trading the December contract today, keep trading it. If you've started trading March, it's okay. Keep trading it. By tomorrow, I'll be looking at March. It will have the higher volume. I remember I went to go see Return to Forever at the Auditorium Theater in Chicago. It was a beautiful theater. We had box tickets. Me and some friends of mine were big fans, and boy, what a show that was. All right. Jamie, we will crash today because of Russia, Ukraine, Evergrande, and a little bit of COVID. Who knows? You know, every time I think that these markets are going to roll over, they remind me of how resilient they really are. We'll have to see. Robert, are you going to start chatting or talking during trading hours? It's something that we talk about doing. It's something that might be on the horizon for us, Robert. If that's something you'd like, make sure you let us know. With Dweezil, best show ever. Wow, that had to be a great show in Nashville too. Yikes. All right, let's take our deep breath and get ready for action here this afternoon or this morning. My pleasure, Epic. I'm going to stay humble, grateful, and creative and patient today. Today's Thursday. No recap because we're doing the Q&A with Michael Patak at 3 o'clock today, so you'll be able to see Dan and Michael Patak, and I'll see you back here tomorrow morning for the market forecast. Tomorrow is Friday. Trade well today. Get out there and profit. I'll be in the pit in a few minutes. I'll see you there.